Hello, welcome to Beat the Street, the show that gives you all the tradable news and data you need to know ahead of the Wall Street Open. Coming up, US stocks in focus as glimmers of hope that interest rate they're potentially going to pause, and this hope supporting sentiment ahead of the Fed meeting in the coming week. We've got ARM, Nomura as well in focus, and both of them returning to market amid hopes and signs of a global IPO revival. More on that in just a moment. Watching car makers for you as well. GM, Ford, Stellantis as the UAW launch simultaneous strikes at 3 factories owned by the Detroit Three. Now, good afternoon. I'm Angeline Ong and welcome to this new edition of Beat the Street. Not long before Wall Street starts trading, we've got some breaking news numbers just crossing the monitor as well. Manufacturing figures. This is the New York Fed manufacturing figure for September. Expectation was for a -10, and we got 1.9, so a surprise there. Import and export prices also coming through for August. Expectation 0.3%. We got 0.5%. This is import prices month on month. And for the export prices, we were expecting 0.4%. We, in fact, got 1.3% for the month of August. Not seeing much of a reaction there, of course, as I mentioned earlier. Investors now counting down to the Fed, especially as hopes of a Fed pause are starting to come back to the market. Also, in the mix, we're seeing investors looking at all these IPOs, Instacart, ARM Holdings, Nomura Therapeutics, another one coming out today. All this signs that perhaps the IPO market might be revving up after a 2-year hiatus. Also showing you the US Tech 100 here, because we have seen this really gain ground in the first half. It remains to be seen whether we are going to see this move up continue in the second half. However, it must be said, just bring up the US 500 for you, that we've had quite a peculiar month for September, and we have had a strong couple of days. European shares also extended their rally on Friday, on track to end the week higher after a sharp jump in the previous session, after the ECB signaled a potential end to its rate hike cycle. Now, clearly, as I mentioned earlier, the thing that everyone is counting down to now is the Fed. We are looking at a 97% chance, traders say, of the Fed holding rates in its September 20th policy meeting, and a near 67% likelihood of a pause in November. This is according to the CME Fed Watch tool. Now, ahead of all that, IGTV's Axel Rudolph has been looking at the technicals for the Nasdaq.
Yes, what is really interesting here is, as you just said, Angeline, we've had 2 days of gains in the Nasdaq 100. And earlier this morning, we tried to overcome yesterday's high, but so far unsuccessfully. And from a technical perspective, what we want to see for the bulls, at least, is to have a break through the July to September downtrend line, which can be seen at 15,535. Now, that might not happen today because today is triple witching, where you have auction expiries. And quite often these happen around round numbers. So it could be around the 15,500 mark for the Nasdaq 100, for example. But next week, if we were to break through that downtrend, it's quite likely that we would have another attempt at overcoming the current early September high at 15,628. And if we were to manage to close above that, that's a big if, of course, then we could actually head all the way back up again towards July highs around 15,900 or so. So right now, short term, we'll have probably quite a lot of volatility today in the Nasdaq 100. But if next week we can continue this positive momentum we've been on for the last 2 days, I believe further upside is likely in store. And the reason I do so has to do with the volatility index. If you look at the VIX, you can see here the volatility index is now trading below its low back from July of this year, below the 1507 mark. At levels, and I need to go out onto a weekly chart here to show you this, last traded when the pandemic began, basically back in February of 2020. So volatility is really at extreme lows. And usually what we tend to see is it increasing either in September or October of each year. But so far, equity markets have actually pointed higher and may actually continue the upward trend.
Certainly, we are braced for volatility, given that I think the number is $4 trillion, this triple witching options event. Also, with the Fed and Bank of England, I take it you're also watching out for the cable and also US dollar versus other currencies. What are the technicals telling us?
Well, I'd like to look at the euro against the US dollar because, as you just mentioned, the European Central Bank hiked its rate for a 10th time in a row to 4% yesterday. And on that news, euro dollar actually slid to levels last traded back in March of this year, but then started to stabilize just around the May low, around 106.36. But as you can see here, we remain in a long downward channel. It's a bearish channel. We have a series of lower highs, lower lows, all of which is the definition of a downtrend. And I wouldn't be surprised if next week if we fall through these lows, which is likely, we could head all the way back down again towards the January and March lows between 105.16 and 104.84. So the trend is your friend, and basically that is pointing down. And provided we stay below the last reaction high, that's to say the high from earlier this week on Tuesday at 107.69, further downside looks to be in store there. And the story is quite similar with regards to cable. You can see here the British pound is also weakening as we speak and has fallen through the red line, the 200-day simply moving average at 124.34, and is on track to fall back towards its mid-April and also May lows between 123.45 and 09.
Thanks very much, Axel. We'll check in with you next week for more details on where those technicals are headed. Also, speaking of volatility, plenty of volatility in the US auto sector. Just checking in on General Motors. It shares at levels not seen since around June. However, what's more interesting is this day chart here. Looking at that, this is, of course, all sessions on the IG platform. Seems to have recovered since recent hourly moves, just showing you the hourly picture here. Similar with Ford as well. I want to show you Ford because this is another all-session stock, and they are also included in this really fast-moving story. The United Auto Workers Union launching simultaneous strikes at 3 factories owned by GM, Ford, and Chrysler parent Stellantis, kicking off the most ambitious U.S. industrial labor action in decades. Now, the walkouts will halt the production of the Ford Bronco, the Jeep as well, the Jeep Wrangler, and the Chevrolet Colorado pickup trucks. If trucks are your thing, that's a big one in the market. The UAW strike is really, really key because it does mean a huge impact to output. Joe Brusuelas, RMS chief U.S. economist, says that it would put at risk $500 million per day in an economy that generates more than $26.7 trillion in goods and services each year, or more than $73 billion per day. So a huge hit if this continues for a long time on the U.S. economy too. Also, another one I want to touch on, ARM Holdings, because it did jump after its return to market. It closed at 63.59 on Thursday, giving it a valuation of $65 billion US dollars as it returned to public markets following a 7-year absence. And all this, as I mentioned earlier, fueling the hopes, Instacart as well, fueling the hopes that perhaps we're seeing an IPO revival. Well, earlier, I spoke to IG portfolio manager Martin Harris and asked him if all this action heralds an IPO recovery.
It's an interesting one, Angeline. I think what we're seeing is that obviously when you have high prices in the stock market, it actually attracts the IPOs. We saw British chip maker ARM coming in really to try and take part of this AI drive. A lot of hype around the AI sector. We saw Adobe just the other day releasing results. Some modest gains on the back of their AI profits. That being said, we see the picks and shovels, the chip makers are really getting the most benefit of this early stage in AI. ARM yesterday being one of the top traded stocks on the IG platform, opening at 56.10, closing at 63.59. So really positive for the first traders there. The this is on the back of, we're seeing, the likes of Instacart, who didn't manage to list in the first sort of bubble that we saw 2020, 2021, and have had to delay their listing and have finally made it onto the stock market now. All of this bodes well for investors having access to more companies. But again, it's really that we wait for high prices in the market to dictate when the IPOs happen, rather than IPOs coming in and pushing the market further.
Thanks so much, Martin. Staying with IPOs, we've also got Nomura Therapeutics, as I mentioned earlier, beginning trading today. The ticker will be NMRA.O. The company sold 14.7 million shares, priced at the midpoint of its previously disclosed range, and it values Nomura at $2.58 billion. Also, another big mover this week has been New York cocoa prices at 12-year highs. We'll see in a moment, very close to breaking to multi-decade highs. How can we as traders take advantage of this hyper trend that seems to be in place? Well, IGTV's Jeremy Naylor has been taking a closer look. Jerry?
Yeah, it's interesting, actually. Cocoa appears on the IG platform in two forms. There's the London cocoa price and there is the New York cocoa price. I thought I'd focus on New York cocoa price because we talk about how the US markets are going to open. We already have early quotes coming through from the New York Mercantile Exchange, which is where cocoa trades in New York. It's been trading in New York for 98 years now. It started off in the New York Cocoa and Coffee Exchange. It also trades here in London, though. Now, there's two very distinct types of cocoa here. The one in New York focuses mostly on South Asian economies, South American economies. The one in London focuses on Africa. And Africa is where the news has really come through from this week. There's a couple of news stories. First of all is crop failure because of the very, very dry climate now that exists in Western Africa. And this is going to be a real problem. The other thing is that we've seen the Ghanaian government this week come out with something that I think we're all going to applaud. And that is raising prices because it wants to reward its workers better than they have been rewarded. And it wants the West, the big consumers of cocoa, to pay for this. And so the Ghanaian government has increased prices because it wants to distribute more money. The problem is that there's just not enough cocoa to go around anyway because of the problems with the weather. But we're talking about New York cocoa. Let me just quickly take a look, first of all, though, at the London cocoa price, just to reference what I was talking about. This is at a 46-year high now. Unfortunately, the London cocoa price on the IG platform doesn't go back far enough to make any comparisons. So I think the best way to do this is to look in more detail at the New York cocoa price. Now, these are 1 month candles, and you can see here this spike on the left-hand side of the chart going all the way up there was July 1977, and that is a long while ago in anybody's lifetime. Not many people in the market remember this, but I thought perhaps what I'd do is I'd take a look at where we are and where it's likely to go. Unlike the London market, which is at multi-decade highs, New York cocoa has yet to beat this high that we saw here back on March 2011. Now, for this, I want to go into the daily candles. I've drawn a Fibonacci extension on here, which I've put on the daily candle chart as well. Just showing you where we are, these highs, May 1979, very close to those levels. Let me just focus in on this far right-hand side of the chart, because this is where all the action is happening. And as I said, I got this Fibonacci extension on here. This is one heck of a rally that we've seen. A couple of things I want to point out about this, Angeline. First of all is that since the lows back on the 22nd of September, we had this relatively shallow upward facing trajectory for support. Then came this line, which is more serious in terms of its angle. And then most recently, since the lows back on the 24th of August this year, we've seen a really steep trajectory. Now, in some people's books, we're getting to the point of exhaustion on this. That being said, let me suggest there's potential further upside to go from here. So how do we trade it? Let's assume this trend is going to continue. And let's assume we get a candle close beyond the 37.75, which is the highs that we had here back 12, 13 years ago. In fact, March 2011, actually. So that's the highs that we had here. Once you get a candle close beyond there, where does it then go? You've then got a line here neatly up at the 40.09 level, which were the highs that you can see here back in July 1997. And then comes this next line at 47.31. In terms of the Fibonacci extension, the next big line to watch out for of resistance is the 161.8%, which takes us all the way back to this massive, great big spike. So the Fib doesn't really coincide with some of the attributables going back in terms of some of the areas of where we do have some resistance coming up. But I just thought perhaps I'd explain what's going on. How to trade a trend. Keep on going higher as long as it takes you. You bring your stop loss up underneath you to lock in profits, and you just ride the train until it reverses out, takes you out, you lock your profits in, trends over, and then you move on to something else. So that's how I want to leave things as we go into the weekend. Something to think about, Angeline.
Thanks very much. It sounds like my cocoa prices will remain high for a bit longer if we take some of those assumptions on board.
Yeah, look, very quickly on that note, I think it's all down to the weather. There's no doubt about it. The Ghanaian government's doing all the right things in terms of reward for its people, but it's all about the weather. We're not getting enough water through, and that is the problem for these crops. The crops are not producing the cocoa beans the way they were, and I think that's really going to be the big play here. And so long as we get that, higher highs, I think, the order of the day. Take advantage, bring your stop loss in, lock in those profits.
Thanks very much, Jerry. I'm sure we'll be checking in with you on those cocoa prices in the days and weeks ahead. Just want to quickly check in on the markets for you as we count down to the open. Of course, just showing you the Wall Street chart here, because on an hourly chart, you can see that we are seeing it tick slightly lower. However, there is still quite a lot of trepidation as we head closer towards the open. Investors, though, has to be said, remaining optimistic about a likely pause in US interest rate hikes. And if we do get a pause, we could get any signal from the Fed that perhaps they have stopped for now in terms of tightening, then we could see another rally. So showing you the daily figure, because if you spread this out still slightly, the upward trend channel still remains in play, and it hasn't, to be fair, been a bad few first sessions for September. And with that in mind, that's it for this edition of Beat the Street. Do have a very good weekend. If you want more analysis from us, do join us on @IGCom or @Angeline Ong, or indeed @Jeremy Naylor for the latest analysis on IGTV.